Red Cloud Financial Services is your preeminent source for mining industry opportunities. The team provides a unique, tailored marketing program dedicated to reaching the right people from its mining-focused global network, giving clients access to industry-leading events and conferences, retail and institutional marketing, plus an in-house growth-driven digital agency. Red Cloud Financial Services has access to some of the mining industry's most notable companies and CEOs.
Hello and welcome to this live silver showcase brought to you by Red Cloud Financial Services. I'm Mark Bunting, the host of RCTV. Thank you very much for being with us today. We have a great show lined up. We have executives from 6 different silver companies. 4 of them will be giving presentations, including some slides. And I'll be having one-on-one conversations with 2 of the other executives as well. And following those presentations and those conversations, we will have a panel with each of these executives from silver companies, and we will look at the macro picture and dive into some of the issues facing the silver market right now. Now, before we get to our guests, we have a table setter, an overview from Taylor Combaluzier, mining analyst at Red Cloud. He's going to take a look at the silver market. He's also got a couple of names for us as well. Taylor, let's bring you in here. You can take it away.
Great. Thanks for the introduction, Mark. So today I'll tell you a few key reasons why we have a positive view on the silver market going forward. I'd also note that we published a silver report last week, which is available on our research portal. So to start things off, silver is sitting just below $37 per ounce, and the gold to silver ratio is at about 91 or so to 1. The gold to silver ratio did hit a high of 105 to 1 on April 21st in the first half of this year, but it has since moved sharply downwards. Although the silver price is influenced by many of the same drivers as gold, it does typically lag the gold price and has greater price volatility. That's largely driven by its smaller market size compared to that of gold. So right now, the ratio is still elevated compared to the long-term historical average of 70 to 1, which suggests that silver is still inexpensive compared to gold. The gold to silver ratio suggests that silver is currently priced at about a 23% discount to gold, or in other words, the current gold price implies a silver price of about $47 per ounce. In the nearer term, a silver deficit of about 118 million ounces is expected this year. That is down slightly, about 21% year over year, according to the Silver Institute. Mine supply is expected to rise 2% year. That's primarily from Mexico, while the overall demand is forecast to fall by about 1% as year-over-year industrial demand flatlines. We expect silver to continue to follow the gold price, which has rallied due to structural reallocation toward gold, which has been detailed by our commodity analyst, Ken Hoffman. His reports are also available on our research portal. Ken points to gold's rising prominence in the global monetary system, as the Bank of International Settlements now recognizes gold as a Tier 1 asset under Basel III regulations, and China's institutionalization of gold within its domestic financial system as key developments in that shift toward gold. Meanwhile, ongoing political tensions are expected to drive that safe haven demand. Global economic uncertainty around U.S. trade and foreign policy, as well as the health of the U.S. economy, are going to be key to watch as well. Additionally, we do believe that supply and demand conditions are providing healthy support to the silver price. In the longer term, we do believe mine supply constraints and the increasing silver demand from green energy applications should support the silver price. Mine production is expected to peak next year and then fall as several mines reach the end of their life. These are mostly Mexican primary silver mines, so we do expect Mexican operators should be looking to advance their development assets and or replenish their asset pipeline via M&A. Mexico does remain the dominant silver producing country in the world, produces about 70% more than the next largest producer, China. So we do see continuing trends of decarbonization with the shift of from ICE vehicles to EVs, as well as increasing solar power installations driving that longer term silver demand, albeit at a slower pace than conceived in prior years. Another unknown is how emerging AI applications will affect silver demand given their vast energy and data center requirements. Looking at the landscape today, we do believe that silver M&A activity could be poised to rise. So I'll just kind of outline here kind of the general progression in the market that we typically see in a bull run. So it typically starts with senior producers and then works down market cap to smaller producers, then developers, and eventually explorers. So the smaller companies do eventually outperform their larger peers because as a bull market matures, funding does become readily available for those developers and explorers, and that allows them to advance projects. At the same time, M&A activity increases as producers seek to replenish resources and reserves and are ultimately rewarded by shareholders for showing growth in future production. We do believe we are just in the early days of seeing a pickup in M&A in the silver space. There were a couple transactions in the first half. Next on, we do believe that the junior silver equities have room to run here. These numbers are from our report last week, so there might be some changes. But right now, silver producer stocks are up an average of 33% year to date. That's outperformed the rising silver price. Meanwhile, junior silver and explorers and developers have been lagging the producers with stocks up an average of 26% year to date. So our focus here at Red Cloud has been to turn our attention to those junior silver companies whose share prices are lagging the silver price and or their peers. So with that in mind, we do believe now is a good time for investors to consider increasing exposure to silver in silver equities. So with that said, I will give a couple top picks here for investing in silver. These aren't in any particular order here. The first one up, we have Blackrock Silver. We have a buy rating and $1.65 target price. Blackrock is a Red Cloud banking client. So the company is funded, it's drilling, and it's expecting lots of news flow while holding an updated resource delineating over 100 million ounces of silver equivalent. It also has a robust PEA on its Tonopah West project. It outlines a post-tax NPV 5% of 326 million US and a 39% IRR. We are expecting an updated resource in the third quarter this year to help bolster those economics in an updated PEA in the second quarter of next year. Our next top pick is Kootenay Silver. We have a buy rating and 320 target price. Kootenay is a Red Cloud banking client. So the company just recently delineated a maiden mineral resource estimate at its flagship Columba project in Mexico. It outlined 58 million ounces of silver equivalent. That adds to the 281 million ounces of silver equivalent at its other Mexican silver projects. So we do believe the company could be poised to re-rate now that it's funded and about to embark on a 50,000 meter drill program at Columba. So those are a couple ideas for investors on the line here. And with that, I will turn it back over to Mark, and that sums up my opening commentary.
All right, thank you very much, Taylor. Taylor Combaluzier, mining analyst at Red Cloud Financial, giving us an overview there of the silver market and a couple of names as well. Now, let's get to our guests. Our first guest is president of a company with a long history of profitable silver production in China. This company also has a development project in Ecuador called El Domo and an exploration project in that same country called Condor. Let's bring in Lon Shaver, president of Silvercorp Metals. Lon, great to see you. We saw you at VRIC last. I'll give you the floor.
Thanks, Mark. And I'd like to thank Red Cloud for hosting this today and inviting us to present. I'll run through a few quick slides here to just give a brief overview on Silvercorp. Of course, we'll be making some forward-looking statements, so just draw your attention to this slide. Basically, this page here I've got up is a good snapshot of the company, and it talks a bit about the past and a bit about the future. And so, talking about the past, we have, as mentioned, a proven track record. We've been in production since 2006, produced over 100 million ounces of silver and 1.5 billion pounds of lead and zinc as byproduct credits. We've generated profits from these mines over 500 million US. All the numbers in our presentation are US, by the way. And we've returned over 200 million to shareholders through dividends and buybacks. We still have a dividend in place. And we're sitting with cash as of March, our March year end, 369 million. And then as well, on top of that, we have a portfolio of other mining equities, which is predominantly our 28% stake in New Pacific Metals. You can see in the bottom right of the map there, that's what gives us some indirect exposure to two great silver projects in Bolivia. But as I said, that position is on top of our cash. I'll note we did a convertible debenture raise last year, which added 150 million. So part of that 369 is from that convertible, and the rest of it is cash that we built up from free cash flow from operations. We've, through our operations, really established ourselves as a credible, sustainable operator, and hence we've earned an MSCI A rating. Now, the way we view the company is that we've been operating these profitable mines in China and really using that to support growth. We want to grow the company. These mines have, as mentioned, have been for many years and still have, as you can see on the right-hand side, a healthy mine life in front of them. Ying Mining District is in fact a district of multiple mines that we've been operating profitably, very high grade, very low all-in sustaining cost. For the year ended in March, we were just over $12 to produce an ounce of silver once you factored in our byproduct credits. After our acquisition of Adventus Mining last year, as mentioned, we've moved into Ecuador, and we're currently constructing the El Domo copper, gold, silver, lead, zinc mine there, which we have forecast to come on stream at the beginning of 2027. It's got a 10-year mine life based on the feasibility study. And along with El Domo, we got the Condor Gold Project, also in Ecuador, a different part of the country. And we recently announced an updated resource estimate, and we're transitioning to do a PEA by the end of the year on this, so we can move forward with what we believe will be a different and more sort of more logical development plan than the previous open pit that had been identified for that project. Just highlight that in China, around the Ying Mining District, we're also building an additional mine called Quanping, which will be a satellite to the Ying Mining District, and we'll share some of the infrastructure. And last but not least, we have another mine that's under permitting in China. It's a gold mine. It's a brownfield site. The market gives us no value for it, and we think we're making progress on getting the permit for that, which will give us something else to think about in terms of whether a mine to build or to sell or to monetize in some fashion. So it's really this track record that has allowed us to look forward and grow the company. And speaking of growth, I'll jump to what our strategy is here. It's looking at organic growth, and all the projects we have on the board are all fully funded. China, the upgrade and expansion at the Ying Mining District, which involved building an additional tailings facility and expanding the mill last year, all funded out of cash flow. And we're looking to increase mechanization at the Ying Mining District so we can up the tonnage and cut back on some of the costs associated with labor. As mentioned, we're bringing the Quanping project, and that we have a modest budget for this year of about $4 million to do some development to get down to the ore zones. In Ecuador, that's a bit of a bigger construction project at El Domo. We recently announced a $240 million CapEx number for that. But it's important to note that in addition to our cash that we have on hand, El Domo comes with a stream arrangement that was signed by the previous operator of El Domo, where Wheaton will contribute $175 million towards that $240 million in CapEx. So the cash out of our pocket will be the balance, just approximately $75 million. And as mentioned, looking to grow the Condor project into a high-grade underground gold mine, with the PEA being the target for this year, as well as some permitting to do some exploration drifts. Moving to the middle of the slide, acquisitions. We've obviously been active over the years in M&A. Adventus, that transaction closed in July of 2024. You can see listed on the slide some of the other ones that got away. We certainly feel we've done a good job at identifying and surfacing value. But in all of these cases, we declined to get into a bidding war and overpay for an asset. And in most cases, we made a profit on either a break fee and or the toehold investment that we had in that position. We remain active looking around the world at what we think will be high margin projects, like with the ones we've been operating in China, that are ready to build and at reasonable capex. The third leg of our growth stool is incubation opportunities. And I'll just sort of again highlight 28% stake in New Pacific Metals, which entered into Bolivia originally for the Silver Sand project, but then also staked, discovered, and delineated a very attractive silver project called Carangas. And looking forward to permitting and construction milestones on this in the coming months. We have a number of other earlier stage investments, but they're not too meaningful from a valuation standpoint. Speaking of valuation, and Taylor made some interesting comments at the outset about M&A. When we look at this slide, we can see that Silvercorp is trading at the lower end of the spectrum on these trailing multiples. So this is looking at enterprise value to EBITDA, price to adjusted earnings, and price to cash flow over the last 12 months. And we're down in the lower end of the valuation spectrum. Certainly the easy answer is to say, well, maybe investors are less familiar and less understanding of China. But I think it's also important to note that typically companies that are sort of one asset, one jurisdiction will trade at a discount. And it was mentioned about Mexican M&A. There were a couple additional names on this slide a few months ago, both Silvercrest and Gatos, which were Mexican silver mines that had really mainly one asset, and they've since been absorbed by some of the larger names on this page. And there's another one to go here soon, Mag Silver, which again is a Mexican silver interest. So I think what our argument would be here is that as we grow and scale up to have more operations, we'll be able to offer our investors exposure to a re-rate to higher multiples. So for investors looking for an existing profitable silver producer now, we certainly represent that with growth to come. And with that, knowing it's quick on time frame, I will turn it back to the host.
All right, nicely done, Lon. You came in under time there. It gives me time for a couple of questions here. Just curious, assuming that the El Domo eventually comes online in a couple of years, as you said, in 27, and Condor eventually comes online, what would be the rough impact on production numbers?
Yeah, in terms of thinking slightly differently, the way we see it, it's roughly a 50% increase in revenues. And it's probably better to think that way just because of the portfolio and the mix of metals. And sorry, that's 50% just looking at El Domo. We're not currently factoring any revenue from Condor, as it's sort of, from our standpoint, a pre-PEA project.
Okay, and then as far as the possibility of acquisitions, you just talked about it now. We've talked about it before. And you have mentioned that you wouldn't mind diversifying into maybe some other areas of the world, some different jurisdictions. Is there a real focus on one area, or it could be anywhere, really?
Well, I think it's safe to say, looking at what are some of our previous activities have been, it's looking at Latin America, really from Mexico south. We've shown an interest in looking at projects in Africa, and then call it sort of the broader Australasian region, where we think we can find a project that meets our technical criteria. But then, the other very key thing, and I sort of touched on it, was what's actionable right away. And that really means, does it have, permits and a license to operate with the key stakeholders?
All right, great stuff, Lon. We will see you on the panel in a while. Thanks very much.
Thank you, Mark.
Okay, Lon Shaver, he is the president of Silvercorp Metals. Let's move along to GR Silver. This is the turnaround story, and the company believes there's a real change in perception among investors the last while in the story as they develop this past producing Plomosas project in Mexico. As part of that, there's the San Marcial area, which the company believes is highly prospective. We're going to talk to the president and CEO right now, Marcio Fonseca of GR Silver. Hi, Marcio. Thanks for joining us. Take it away.
Hi. Thanks, Red Cloud, for hosting me today. I'm Marcio Fonseca, President and CEO, and one of the founders of GR Silver. We are in Sinaloa, Mexico, and we have just turned around the company. In the last 1 year, we have done a lot of really financial engineering to remove liabilities. And recently, we made a management change to award some of our key executives in Mexico who are mine operators and have assisted us in the discovery of the San Marcial expansion. I'll be looking some forward-look statements. So the company has been very successful in the last couple of years, increasing the resource and drilling the San Marcial and the Plomosas area, which is part of the Plomosas project in Sinaloa. We have today, in total, indicated and inferred 134 million ounces of silver equivalent. Most of the resource is from the San Marcial area. That's where we believe we have a discovery, and we are back drilling. As you see here, we're on the left side. We are back drilling now in 2025 after hiatus. So there will be a news flow schedule in next couple of months, couple of weeks and months. We are going to see more news coming about the drilling that we are doing at San Marcial. The target of the drilling is to step out of San Marcial, and I'm going to show in a couple of slides later why you are drilling to potentially increase the resource at San Marcial. From a location perspective, we are in Sinaloa on the southwest edge of the Sierra Madre, which is a highly prolific area for silver deposits, 150, 200 kilometers to the north. On the same edge of the Sierra, we have a Vizsla. So it's I state that on that area has a lot of mine operations. Infrastructure, we have a lot of infrastructure at the Plomosas area. What's important about GR Silver in this whole concept of turning around the company, the story is that the Plomosas area was a past producer. That means it's permit to operate, so we can mine. The only thing that we don't have on site is a plant. And I'm going to present later in some slides that we are embarking some assessment to really understand what can we do between now and the end of the year to bring maybe a pilot plant to the site and do a bulk sample work to extract material from the underground mine and understand better the historic mine. But the core asset for the company is the San Marcial. Why? Because the San Marcial, we have made a discovery. On this slide here, what we are showing here in this bullseye anomaly is a big geophysical anomaly that was a discovery that we made with the ground geophysical program that we did. And as today, the company has drilled only 20% of the edge of this anomaly. So we still have a lot of space to explore and drill. The resource in San Marcial area is related today with a very interesting geological setting where there's some big regional faults, these blue lines connecting with the other ones that are the black ones that are northwest. So we have a set of northeast intersecting northwest, creating traps. And with this anomaly, we are discovering that we have intrusives that are creating some sort of source of heat and fluids to create these hydrothermal breccias. We released a couple of 2 years ago the discovery hole that was 100 meters at 300 grams per ton silver, and that brought up a lot of new information to us. We went back, worked with the data, and now we are drilling in these 3 white circles, which represents step out areas outside of the resource, aiming to increase the resource in the near future. So we are very excited about this because the geological setting now is a brand new geological setting now, where that we went back to the data, we reviewed all the data, used all the holes that we had before, and now we have 3 drill rigs on site, 2 operating. It's a small program, 3,000 meters, but that's going to give us the first step in the next couple of weeks and months, next 2 months, to define how we are going to continue to drill. Because now we believe that not only we have a robust resource in this 20%, but we also believe we can expand this along these blue faults and also along the northwest area. We are also, for the first time in the last 12 months, going back drilling deep holes, down plunge from the existing resource, which can help us to create more catalysts for more news and support the story, aiming to continue to increase the resource. San Marcial is a very unique deposit. This is a cross-section, that's a slice from that map. It's a hydrothermal breccia. It's not a narrow vein, but it's hosted on between two main geological unities and has some faults that create a very good trap, because the yellow material here is what we call volcanosedimentary rock. It's a lot of porosity, and it's almost like a sponge that really absorb a lot of fluids. Most of the discovery was done in deposits that were not really daylighting. They were blind, they were below the surface. So we went back to the drill hole data and reworked all the information, geochemistry, mineralogy, the geophysical, and now we have a good handle about what are the pathfinders and vectors related to this intersection, which is 100 meters at 300 grams per ton of silver. What it makes so special. And we are back now on these white areas here, looking for similar type of mineralization by drilling. So investors are going to see more and more some news release about drill holes and the proof of this concept that we can expand the resource at the San Marcial area. In addition to this, it's very important for investors to realize that GR Silver, when we acquired the Plomosas mine, the Plomosas area from First Majestic, which is a shareholder from GR Silver, we realized that it's a mine that have all the permits to operate. We have 7.4 kilometers of underground tunnels. We have the water permits, blasting permits. The only thing that we don't have on site is a plant. Some of the infrastructure is there ready to be used. And in Mexico, which is a mining jurisdiction that is predominant, one of the largest producers of silver in the world, having an asset that has the permit is a major asset for the company, because if the company is successful with the bulk sample program that we are doing, in the near future, we can be in a position to likely bring a pilot plant and start to extract material from the underground and establish relationships with off-takers and new investors. We took similar approach in another mine nearby that we controlled at the San Juan. We took 20,000 tons of material and we produced 420 tons of concentrate. We sold the concentrate. We proved that process, going underground, applying a bulk mine approach, it's feasible not only to get to know the ore, but also to expose high-grade material and understand better the mine. This week, we released the first batch of the samples of 21 potential stope areas that we are sampling to understand. We are very excited because most of the samples came above of what we believe is the resource model in those areas, giving us a lot of excitement to continue the work, continue to collecting more samples, and bring engineers to run some sort of studies to say, how can we really define a bulk mine sample test work program at the Plomosas mine, because we have two access, 7.4 kilometers of tunnels, electrics, hydraulics in place. We only need to understand better the ore body and work our way to extract more value from Plomosas. The company today has close to $2.2 million in the bank, but we are funded for this program. We have a good mix of shareholders. Very important point of GR Silver is high liquidity. We have a large volume being traded every day, pretty much in the market, which gives a lot of opportunities for investors. Recently, you put an announcement that was the change in management. Eric became executive chairman. I came back as being president and CEO because the company is embarking on a more heavily technical and to get the bulk sample and the expansion of the resource at San Marcial. We award Alejandro Cano, that now VP of Operations, who have operated big mines in Mexico, and Luis Cotto, that was fundamental for us for the discovery at San Marcial. So that's GR Silver. We are a resource expansion company which control assets with permits and 100% controlled, with a good flow of news release in the next 2-3 weeks in relation to the drill results based on the discovery that we have made at San Marcial. Having done that, I move back to the host if there's any question.
Okay, thank you, Marcio. One question for me. The company, and you alluded to it there, we know it's a turnaround story, but you have said that there is a change in perception among investors now that the working capital deficit has been eliminated, and also valuation from a enterprise value to ounces in the ground perspective is improving. So what are you hearing from investors? What are they telling you?
Investors are becoming more excited about the story because, just to give an example, 2 years ago, we have more than $20 million of liabilities in the company. Today, we have less than 900,000. Was a very systematic program that management and executives put in place. And that created a lot of interest from investors to see that the company is not going to be carrying that liability anymore. And with a small capital that we raised this year, and the resource that we have 134 million ounces, we were relatively undervalued compared to the peers. So we got a lot of attention, a lot of new investors, retail investors coming and participating in the story.
All right, thank you very much, Marcio. We'll talk to you later on the panel. That is Marcio Fonseca. He is the president and CEO at GR Silver. Moving along to our next guest, we're going to talk to the head of Blackrock Silver right now. This is a company that is developing the past-producing Tonopah West project in one of the most prolific primary silver districts in the world, Tonopah in Nevada. Joining me now is Andrew Pollard, president and CEO at Blackrock Silver. Great to see you, Andrew.
Hey, well, it's nice to be seen.
Always. All right. So one thing that we know the company had been doing was a measured and indicated conversion drilling program, and then along with that, a resource expansion program as well. And you've got a fair amount of drilling results from that. So would you say that based on those two programs that you really have only strengthened the scenario, the idea, and the concept that you are what you've said you are, and that's one of the highest grade, lowest cost primary silver companies in the world?
Yeah, well, absolutely. It's looking that way. I mean, in mining, they say grade is king. Our project was once known as the queen of the silver camps back when it was pumping out gold and silver 100 years ago. And it's looking like its veins still run royal blue. This isn't one of the highest grade projects out there. This is the highest grade development stage story in the world right now. Our head grade of 570 grams per ton silver equivalent, that's 55% higher grade than the next closest peer comp in the industry. And that's based off our inferred drilling. Now, one of the biggest catalysts for the year, we're staring down the barrel of a gun right now, looking at it, which will be our resource update, which is looking like it's going to be coming down the pipe in early September. And our grade already stands out, but by tightening up the drill spacing, bringing it down to 25-meter centers, really where we're focused on drilling out the early years of production there, we're expecting, based off what we've seen, for that grade profile to ratchet up even further. One of the biggest valuation gaps in our stock versus the peers right now is that the market up until recently has built-in skepticism as to whether our ounces really are as good as they look, meaning do they hang together? And I think once we get this resource out there, not only will we, snuff those objections right out of the way, but that grade profile, that M&I grade profile, that credit will be unlike anything else out there, just given what we've been drilling. And, the consequence for costs, well, not only are we the highest grade developer out there right now, but we're the only one that's just gold and silver, which means to process it is significantly cheaper. We don't have to make lead and zinc concentrates. We don't have to get smelters involved. It's very boring, simple metallurgy. You just crush the rock and you run it through a Merrill-Crowe. So we're going to be a doré at site as well, which also lends itself to very low cost. Our PEA, which we put out last September, just based off our initial 100 million ounce resource, that showed that we've got the potential to produce at under $12 all-in sustaining costs, which compared to anything out there that's producing now, that would be cheaper. We expect, by the time we get all of the drilling we want to get done, by the time we get not one, but two new resources out within the next 6 months or so, and incorporate that into a new PEA come early next year, those costs should continue to ratchet down even further, because it's very highly likely that we'll be able to increase the mill throughput ratio on this, which would also have a positive consequence for the prices. But right now, we're just putting our head down. We're working the plan, and the next 6 weeks or so should be pretty interesting as the market starts positioning in advance of this M&I resource.
So with that resource update, you don't have the hard numbers yet, obviously, and you can't release them. But do you really think that the market's going to have their eyes open?
Yeah, well, that's a good point. We started doing our resource conversion program drilling in July of last year, and you're putting up tranches of drill results, every month or every month and a half, and the market didn't really do much up until we put out our last news release with all of the drill results, the final tranche of drill results from that program, and then the entire table of all of the drill results that we've had from that program. And since then, our stock's moved up about 40% because people can see the totality of the program. Tranches of drill results, when you're trying to establish continuity, don't really tell the whole picture. But then you look at the entire table of them and you're saying, holy cow, look at those grades. Look at their hit ratio, look at those thicknesses. And all of a sudden, the market has been waking up. But we got a lot more room to run, compared to the other high-grade stories out there on an EV ounce in the ground valuation basis. We're still trading at a 40 to 50% discount to them. And that's not even factoring in resource growth. So, not only are we 55% higher head grade than the next closest peer comp, but we're trading at a 50% discount to them even now after running. Well, I think September is going to be a big come to Jesus moment for the market here. And then, we've also been, not just focused on tying together the mineralization that we knew was there, but we've been focused on blowing off the doors in terms of the potential upside. How big can the system actually get? And, even just earlier this week, we announced separate results from our expansion drill program, where we've gone and locked in about 500 meters of bolt-on strike expansion from our existing mine plan to the northwest. So, it's one, we're upgrading our ounces, and two, we're expanding our ounces. And our targets for further expansion have never looked better. We've augured into a new 1.2 kilometer zone, which is very, very shallow and bolts onto the eastern side of our existing mine plan, which is just pure blue sky that we didn't even contemplate 6 months ago. We've got a pretty clear path forward to, not only deliver this resource in September, but, we've got some pretty clear targets where we can stack some serious ounces over the next 6 months leading into that expansion resource too.
And Andrew, having said that, are you even more optimistic now that the life of the mine could go from 8 years to maybe 12 or 13 down the road?
Yeah, well, going into this program, it was our stated goal to do two things. One was at $1,900 gold and $23 silver, the project had about a 2.3-year payback period. Well, we used part of that we used that same mine plan to go back and infill and drill out to M&I the first 2 to 3 years of anticipated production. That's what's going in this upcoming resource. But to your point on the expansion potential, 10 years is the magic number for us, because beyond 10 years, at the current mill throughput, which is a 1,500 ton per day mill, once we get to, if we're showing, 12, 13, 14 years at 1,500, well, what we want to do is then look at expanding the mill. We want to end up with something like 10 years of production. And if that means that that mill expands from, say, 1,500 to 2,000 ton per day, I think, based off just that 500 meter zone we just hit, I'd be shocked if we didn't already hit that 10-year threshold. So every ounce we add here on in, with the additional expansion opportunity in front of us, that would look at that would allow us to increase the mill throughput. As you increase the mill throughput, that tends to lower the cash costs, and it also moves obviously the production profile. So we go from a mid-tier production profile with world-class cash costs to a tier 1 production profile with even lower cash costs. So I expect our production profile, our economics, everything to look very, very different between now and our next PEA, which we're hoping to get out by the end of Q1, early Q2 next year, with both the increased, hopefully the increased grade profile from the M&I drilling in the early years, and just blowing out the ounce potential with the straightforward expansion drilling we got in front of us.
Now, from a financial standpoint, the company recently raised nearly $14 million in a bought deal. Red Cloud was part of that, the syndicate. We also know that Eric Sprott is a shareholder, very supportive of Blackrock Silver. So how would you describe the cash position, how you're funded right now, and how it's being allocated?
Yeah, well, with your mention of Sprott there, it's very interesting because he was already our largest shareholder. But what a lot of people have noticed is that over the last, say, month or so, he's been averaging up as his confidence in our ability to just deliver on this next resource and the economic potential of what that means to the overall economics, just by optimizing the early years of production. So he's been buying relentlessly in the market. I think even just last week, he was buying us up to 50 cents. In terms of our cash position, we put out our end of Q2 financials, which was up to April 30th, just a few weeks ago. And that showed we were sitting on about $10.5 million. Now, what's interesting about that is that we stopped our resource drilling in the very first or second week of May, meaning when we're not drilling, we're not really spending any money. So the bulk of that, of our treasury, is exactly what it laid out on that on our financials there. And what we were waiting to do was waiting for these expansion drill holes to come in, which we just announced, get those into the model, and then put our head down and start targeting about where we want to go next. So we're sitting on a lot of cash right now. We've got some very compelling blue sky targets in mind. We've got 500-meter zone remaining to the northwest, which will connect it to an orphaned 12 million ounce deposit, which is really just the same vein zone, just had a gap in drilling. We think we can tie that up very straightforward, quickly and easily. But we also earlier this year hit a 1.2 kilometer step out with 7 different drill holes hitting high grade mineralization across this 1.2 kilometer zone. And what's really nice about this zone is it's very shallow. It's relatively the same depths as our M&I program, which we just completed. So what that means, it means pure blue sky. It also means it's going to be quick and cheap as chips to drill out. So, we're wrapping our head around where we want to go first. We've got cash to do to go out and just keep adding ounces. And as I was saying earlier, every ounce, every ton we add here on in, I'm thinking means that that'll just strengthen the case to start increasing the throughput and really blow out the production profile and continue to decrease the cash costs. So it's going to be a wild end to the year. We want to get the drills back as quickly as possible, and we're working on that so that we've got follow through when I think we're going to beat some expectations on this upcoming resource and have some assays pending once that comes out.
Okay, Andrew, that's our time with you. Thank you very much. We'll see you on the panel in a while. The president and CEO of Blackrock Silver, Andrew Pollard. Let's move along to a company that has a long history of production in Mexico, Avino Silver and Gold Mines. They have a producing mine. They are developing another project. They also have an oxide tailings project on the go as well. This stock, last I looked at it, only up 265% in the last year or so. I've owned this off and on, full disclosure. We bring in now David Wolfen, President and CEO at Avino Silver and Gold Mines. Great to see you, David. Take it away.
Great to be here, Mark. Thank you. Avino is a junior producer and explorer, and we have a clear path to become an intermediate producer in the next couple of years. I'm going to just run through some slides here. going to make some forward-looking statements. So the primary asset is the Avino mine producing in Durango, Mexico. This is in the heart of Mexico. They got mining in their DNA there. There's a history of mining that goes back hundreds of years. So the beauty of that is we have 100% Mexican labor force, right up to our chief operating officer, who's a graduate of Colorado School of Mines. So we've got a first-class team there. So the Avino mine is on pace to produce between 2.5 to 2.8 million ounces of silver equivalent this year. La Preciosa, our second mine, we're bringing online now. We announced we've got the permits this year showing that Mexico is open for business. We're tunneling into La Preciosa right now with all brand new equipment. And then the third asset is the oxide tailings project that will come online in a few years. So we'll go from one producing asset to three. Large silver equivalent resource base, 277 million ounces of silver equivalent, 43-101 compliant. 94 million ounces of silver equivalent inferred. 60% of that is pure silver. So well over 200 million ounces of pure silver. So great leverage to the metal. Here you can see our production profile. So this year you can see the dark blue represents the Avino mine, the lighter blue represents La Preciosa, and the lightest blue is the oxide tailings project. This plan was put together prior to the rally, so we're already looking at expanding on this idea and seeing if we can speed it up and ramp higher. You can see next year, La Preciosa is a huge contribution. We're going to have a 30 to 40% output growth just from grade alone. So it's amazing what grade can do for output. So we'll be up near about 4 million ounces of silver equivalent next year. And production by metal. So this year, our revenue, 49% will come from silver, 19% from gold, and 31% from copper. It's going to go higher as we bring on La Preciosa and oxide tailings. La Preciosa is almost pure silver, 90% silver, 10% gold. The copper is in the Avino mine, which is a huge stockwork brecciated system we've been mining for decades. And our financial picture here from Q1, revenue of 18.8 million US, gross profit of 10.6 million. Our margin is 56%. So we had record net income after taxes of 5.4 million or 4 cents a share. Cash flow from operations before working capital was 7.4 million or 5 cents a share. Our cash cost per ounce is $12.62. And the AISC all-in sustaining is $20. This is going to come down with La Preciosa because the grade is going to help lower our costs. And our balance sheet's been growing, 26.6 million in cash at the end of March 31st. I believe now we're pushing on 40 million US and we're debt free. Here you can see the cost per ounce. So Q1 1262 and AISC 2008. So it's healthy margins, and when we bring on oxide tailings in the next few years, the AISC on that is 10. So if you take La Preciosa and oxide tailings, we'll be down in the low teens for our AISC. And cost per ton, so at Avino, this is amazing for an underground mine, below $100 per ton. Cash cost $51.93 and all-in sustaining $77. So because we're long hole sub-level caving, which is a cheap form of mining. La Preciosa, 19 kilometers away. It's in rolling farmland. It's a safe jurisdiction. And we're not in a remote area. So we haven't had any problems with theft. We're in a busy area because the Avino mine was discovered in the 1500s. The beauty of that is infrastructure. So we've got 20 to 30,000 people that live around the mine. And so it's a busy area. We have a 20-kilometer dedicated power line capable of 5 megawatts, and we're only utilizing 3. So when we go to build the oxide tailings plant, we have excess capacity. Network of paved roads, high water supply. We're recycling water. We're using dry stack tailings. We built that for $10 million during the pandemic. And so we're backfilling the old open pit mine, which is a form of reclamation. And our current plan is to put in a simple decline at La Preciosa and haul the material to the Avino mine. We have a 2,500 ton per day plant with 4 independent circuits. So we have the ability to keep La Preciosa ore separate from the Avino ore, which is a great thing. Moving on, so at La Preciosa, 1,500 drill holes, been pin cushioned by Pan American Silver, Coeur Mining, and Orco. 90 million spent. Coeur bought out Orco in 2013 for $350 million for this one asset. We bought it from them in 2022 for $30 million. 10 cents on the dollar. You can see it's all red, so it's between 150 and 500 grams of pure silver, not equivalent. And then here you can see above 500 grams in the red areas. There are multiple kilogram hits, well over 1,000 grams per ton in this mine. So we're very excited. The market's very excited about us getting in here. We have 17.4 million metric tons of measured and indicated, or 113 million ounces of silver equivalent. Then another 4.4 million metric tons of inferred, or 24 million ounces of silver equivalent. This was a reduction from Coeur's plan. They were planning a giant open pit mine, which actually doubled all these numbers. We raised the cutoff grade for underground mining. So if the Mexican government allows open pit mines, this resource grows overnight. Next slide. This is how we're going to mine it. 4 meter by 4 meter decline ramp, rubber tire trucks, mechanized equipment can get in there. We're going to mine La Gloria and Abundancia first, and then drift over to Martha Vein. Again, this plan was put together prior to the rally, so we're already reimagining putting in more portals and getting more of this material out faster. Brand new Sandvik Jumbo arrived on site prior to us making our first blast this year, and there was the first blast at La Preciosa. So totals here, 53.1 million metric tons of M&I, 277 million ounces of silver equivalent. If you look further to the right, that's 171 million ounces of pure silver, 800,000 ounces of gold, and 300 million pounds of copper. Then in an inferred, there's 23.8 million metric tons. If you combine those 2 tons and you look at the capacity of our mill, we can do 750,000 tons annually. This is 100 years of mine life, so plenty of room for further expansions. Research, moving on. And here, as Mark said, #1 performer in our peer group, right at the top. We're very proud of that. We worked very hard. We're an overnight success after 50 years and still growing. And market cap, 500 million US, 700 million Canadian, trades on the TSX, but most of our volume and liquidity is on the NYSE American. Yesterday, I think we traded over 8 million shares, $30 million of value traded in one day. So it's a liquid stock. There's 147 million shares outstanding. There's no warrants, no debt. Fully diluted 158 million. I put my money where my mouth is. I'm the largest shareholder of the company with management. And then you can see the other major shareholders there. And then we're being picked up in all the ETFs now. So that's why you're seeing huge volume in our stock. And to wrap things up here, key takeaways: primary silver producer and explorer in Mexico. Sorry. Out of time. Strategic 5-year plan, cash on hand 26 million, and debt free. And so I'll just turn it back to you, Mark.
All right, great stuff, David. Just one quick question here. I know we're out of time for your portion, but just looking at the stock since February of 2024, when you were trading around 50 cents, it's up 445%. You mentioned a number of the factors as to why, but when you talk to investors, what are the one or two things that they mention as to why they're so enthusiastic about Avino?
Well, because we can monetize what we have faster than companies that don't have a processing plant. That's key. But we were significantly undervalued because part of our purchase agreement was with Core was 14 million shares, and they were marketing that, and there was a lot of shorting going on. So the stock bottomed in 2023, crossed them out, and we've been up ever since.
And as you know, nearly 20-year highs going back to 2006. Quite a story. Thanks. Thank you, sir. Good to see you. We'll see you in a while.
Thank you.
David Wolfen, the president and CEO at Avino Silver and Gold Mines. We're going to move along now to Bunker Hill Mining, and we're going to talk to Sam Ash. He's the president and CEO. Let's bring him in here. Hi, Sam. How are you, sir?
Doing very well. How are you today, Mark?
Very well, thank you. So let's talk about the past producing Bunker Hill mine that you're developing in Idaho, zinc, silver, lead. You plan to have that in operation sometime in 26. But first off, I'm just curious about the major financial restructuring the company did fairly recently. It reduces your debt, it reduces your royalty costs, and then the end result, part of that is that Teck Resources and Sprott Streaming each own about 20%. So cleaning all that up, can you give us the broad strokes of that?
Yeah, absolutely, Mark. It was a really exciting transaction for us because the way that we really think about it and the way that I think about it is the customer for our product, both the lead silver concentrate and the zinc concentrate, is Teck. So the customer for our product made a significant commitment and investment in advancing the project into production. Along with that, we achieved a major restructuring of the debt. Debt's down by 40% post-transaction. And the royalty cost associated with the stream and royalty reduced from an effective rate over 58%. So the stream is completely eliminated. The royalty came up just a little bit. The net result, 58% reduction in the royalty rate associated with the project. The funding allows us to advance the project to 85% complete, and we're in an excellent position to move the company forward into production in the first half of 2026.
So as you said, you're in a position now to basically complete the project to about 85%. I believe most of that is on the tailing side, but you've also said you need another 30 million or so. So can you elaborate on the progress you're making there?
Yeah, absolutely. So the project where it stands right now, the processing plant is right around 80% complete. The underground, all of the preliminary capital development is done, and we're currently doing the secondary development, setting up the stoping panels for mineral extraction. As part of that development, we're actually beginning to stockpile ore now. The stockpiling will increase as we move through the year and towards production in the first half of 2026. Critical path on the project is the tails filtration plant. That's really the driver of the schedule for us. The tails filtration plant, all the key components are on site. The structural steel is going to be beginning to be delivered over the next couple of weeks. And that's really the driver of the project. But from a processing plant perspective, very, very advanced at this point, and really just looking to finish out the tails filtration plant to get our tailing solution in place, which is the last key to allowing us to be able to come into production.
And would you say, Sam, that 30 million will likely come from current investors, or maybe not?
Certainly, when we're looking at this as a tranche financing. So the first tranche was the financing that we just did. The second tranche will look very similar to the first tranche, where we would expect to see an ongoing participation from existing shareholders.
And then speaking of shareholders and other investors who may be interested in the Bunker Hill story, we know that long-term shareholders have waited maybe a little longer than they would have liked. So what's the message now to shareholders now that the capital structure has been cleaned up and there's a pathway to production?
Well, the way to think about that is that, first of all, from that timing standpoint, it's helpful to just kind of keep that in context a little bit. Bunker Hill has come from a position where we didn't own the asset. All we had was a lease with an option to purchase in April of 2020 to a position where we're going to be going in production in the first half of 2026. That's really unheard of in a mining context in the Western United States. In the last 25 years, there's only been 5 mines that have successfully navigated the federal permitting process. So the restart of Bunker Hill is happening at an exceptionally accelerated rate, which is why we chose this asset to come and work on, because it's 100% private land, 100% patented mining claims, which allows us to move this really kind of iconic U.S. mine through the development stage and into production in an accelerated time frame. But I think that really the story going forward is that this is an asset that is well advanced in the construction phase. We will be going into production in 2026, and we're looking at an asset that has the potential for an extremely long life and will generate between 60 and 80 million a year in EBITDA with 20 to 25 million of free cash flow. An enormous amount of upside exploration potential. We can more than double the mine life, almost triple it with upgrading our inferred resource into the measured and indicated category. And keep in mind that the existing mine footprint represents only around 25% of the entire claim package and mineral endowment. And there's a lot left to find here at Bunker Hill. Bunker Hill operated for 100 years and was able to replace reserves every year over that 100-year time frame. And we have a bright future in front of us here.
A little extra time here, Sam. Is there anything that we didn't touch on you'd like to get across?
Well, I think that when you look at Bunker Hill and you look at the opportunity that we present, it's an asset that's going to be coming into production, producing critical metals and supplying those metals to the North American supply chain. And when you look at our shareholder register, we have strong support from Teck, from Sprott Royalty and Streaming, and everyone is aligned in the pathway forward for value creation. And that is to get into production, generate free cash flow, reinvest that cash flow into mine life extension and expansion, with a particular focus on bringing more silver into the story. Bunker Hill Mine produced 165 million ounces of silver during its operating life, and we see the potential to really bring a lot more silver into the story, where the shareholders can be the beneficiary of the leverage that is represented by additional silver into the mine plan.
All right, very good, Sam. Thank you very much. We'll see you on the panel in just a while. That is Sam Ash, President and CEO at Bunker Hill Mining. One more presentation, and then we'll get to our panel with our 6 executives from the silver companies. Let's talk to Aftermath Silver now. They have the Berenguela project in Peru. It's high-grade silver. Not just that, but high-grade silver, copper, and manganese as well. A unique story. Eric Sprott owns nearly 19% of the shares. Stock has pretty well doubled in the last year or so, and it was named as a TSX Venture 50 stock in terms of its growth last year in 2024. Let's bring in the head of investor relations, Jeff Sunder. How are you, sir?
I'm doing well, Mark. Thanks for having me on. So once again, my name is Jeff Sunder. Capital markets advisor. I handle the communications for the company. Management's out of town, so I'm standing in for them today. So Aftermath Silver is a critical metals focused company in South America, and we think critical metals will be huge in demand going forward. I'm sure we're not the only ones that share that opinion. We've got 2 projects in Chile. But our flagship project is the Berenguela project in southern Peru. It's a silver, copper, manganese deposit, considered to be one of Latin America's premier undeveloped mining projects. Looking at some of our corporate information, our symbol is AAG on the TSXV, also AAGFF on the OTCQX. Share structure, 300 million outstanding at 70 cents, gives us a market cap of 220 million. We've got 10 million in the bank, 6 million in warrants that are well in the money that expire mid next year. Good trading liquidity of 1.5 million shares a day. And as Mark mentioned, we've got Eric Sprott as a major shareholder. He's now increased his shareholding to 25% after an update with management last fall. We know Eric's a silver bug, but he really got into the manganese story and he's become a manganese bull. So he injected another $15 million into the company. These are some of the key people in management of the company. Michael Williams is executive chairman and co-founder. Mike's got 30 years of capital markets and mining experience. He was also the founder of Underworld Resources, sold to Kinross for 140 million. Ralph Russian is a geologist by training, 11 years with Anglo, 20 years in the junior company management. Mike Parker, former First Quantum senior management. He was the country manager in Peru and now has joined Aftermath as our country manager since 2020. So he's put together an excellent technical team for us. Victor Grandi, another key director, former World Bank development officer, spent time in Washington, D.C., local Peruvian, handles all of the community relations, also speaks the local language. Over the last 12 months, as Mark mentioned, we were in the TSX Venture Top 50, mainly due to our share price and market cap increase of over 200%. But we also completed 82 diamond drill holes. We hit on 90% of those, and that includes a 150-meter step out. It was the best hole in the property. It was 290 gram per ton silver, over 1% copper, and 7% manganese. Some key points on the project. We've got a large silver development resource. We've got three resource stage projects for over 200 million. We also originally planned for a PEA this year, but all of our drilling and metallurgy is done to pre-feasibility standards. So we'll possibly transition to a pre-feas by mid-2026. Management will have a press release out in the coming months on the direction of their economic studies. So as mentioned, we've got 200 million ounces of silver in the 43-101 category. That's all measured, indicated, and inferred. Chayacoyo and Cachanel are two projects in Chile. Cachanel's non-core. Chayacoyo, we see the opportunity to double that resource from 45 million towards 100. Berenguela is going to be the focus today, 140 million of actual silver of in-pit ounces. And we're in a silver conference, so I probably don't need to convince people of silver, but obviously one of the most conductive metals. Solar demand is going to consume a lot of silver the next 5-10 years. There's no EV revolution without silver. So with silver, you're going to get the industrial side, but also the monetary side is increasing with the increase in precious metals. Copper, seeing major supply challenges going forward. We've got 224 copper discoveries since 1990, but only 10 were discovered in the past 10 years. And manganese is something that I've become more recently familiar with my time with Aftermath, but the demand for manganese has been growing with the EV battery sector and expected to increase 9-fold by 2030. So what's changed is in recent years, it's become crucial in the electric vehicle battery components. So that usage has led to a change in manganese pricing. So just focusing on the project, Berenguela, it's a large-scale silver, copper, manganese oxide deposit. It's a carbonate replacement deposit that begins at surface. We also benefit from excellent infrastructure, rail, power, road, labor, all within 6K within the deposit. The initial metallurgy is demonstrating we can achieve a battery-grade manganese. This is a snapshot of our 43-101 resource. We've got 40 million tons in the indicated category, 22 million tons inferred. That includes over 101 million ounces of silver in the indicated category and 38 million ounces in the inferred category. We've also got a large copper component that makes up 25% of the deposit and 2.5 million tons of manganese in measured and in inferred, and that would be one of the largest manganese deposits in the world. So project's got a very robust geological resource. So looking at this slide here, if we're just looking at the silver alone at Berenguela, we would be one of the largest undeveloped silver deposits in the world. This is the project location. We're just on the main road from Arequipa to Juliaca in southern Peru. The rail line is 5 kilometers from the project, and due to the higher elevation, will likely take the ore closer to Arequipa for processing. And you can see here, you can see some of the historical workings in the foreground. The project's very accessible from the mining town of Santa Lucia, that's 5K away. It's also where we draw all our labor from, and we have excellent community relations. That's a picture of the train to the Las Bombas deposit, where MMG is the major owner-operator. It's an under-capacity rail line. And to the left, you can see the road. That's the road that goes right by our Berenguela deposit. So again, infrastructure is excellent. This is a picture of the core facility in Arequipa. Over 43,000 meters drilled on the project by ourselves and previous operators. Over 475 drill holes. So we feel it's sufficient enough to move towards a pre-feasibility. This is the picture of the core. The core you see here is grading 2 to 3% copper, 20% manganese, and 3 to 400 gram per ton silver. This is a cross section that shows that the project's ideal for open pit mining. It also shows it comes right to surface. The manganese is in the red and the blue. The red is the high grade measured indicated. The blue is the inferred. So this is the deposit once again, 1,400 meters drilled in strike length. To the right is the step out hole, which was the best hole in the property to date, which we're going to follow up on. 156 meters, 290 grams silver, over 1% copper, and over 7% manganese. So we've got high grade copper as we move to the eastern side of the project. We're going to drill test that next year. And to the southwest, which is the opposite side of the deposit, we've got a skarn target that's completely separate of the Berenguela deposit. So that could really open this up for copper potential. In regards to ESG, we've got a full-time community relations team developed to World Bank standards. We've got regular community information meetings. Aftermath is also providing educational grants for students, and the local workforce provides all the labor. And in summary, we've got more assay results pending, updated 43101 resource in September, which we expect to be robust and de-risked. We've got additional metallurgical results. We're going to drill test those copper targets we talked about, and we're going to also press release what direction we're going to take on our economic study. We're going to go from probably PEA to a pre-feas by mid next year. That's Aftermath Silver, the silver, copper, and manganese Berenguela deposit in southern Peru. Thanks for your time.
Very good, Jeff. Thank you very much. Jeff Sunder from Aftermath Silver. It's time for our panel now. We're going to bring everyone back. We are going to try to have a vigorous conversation here for about 10 or 15 minutes. Gentlemen, I encourage you to follow up each other's answers. Feel free to jump in if you have something to say. If not, I'll prompt you. And why don't we go back to the start and start with Lon Shaver to kick things off here, and everybody can jump in after that. We know that one of the pillars fairly recently in the last several years for silver demand has been the solar industry, but we also know that this so-called big beautiful bill from the Trump administration is not very favorable towards solar and renewable and a lot of the programs that President Biden put in place. So do you think that this bill will hinder solar-related silver demand or not necessarily? Lon, do you want to take that to start?
Well, I think there's some potential for that, but what we've also seen in recent years is a lot of that solar panel manufacturing, which 80% of that is done in China, has been for the domestic China market. And they've been one of the biggest investors in building, renewable power, and with solar being a key cornerstone for that. So I think that helps to soften the blow if there is one. And then I think, as in other markets, as we look at these other barriers coming up and, commentary coming out as it relates to copper is, these producers of these commodities or these end products will simply have to look at other markets around the world. And, there are other markets that are behind in terms of, building out that solar capacity. So might see a bit of turbulence from that. But we think that as the world is diversifying and growing, it can absorb that any excess that might be there.
Who wants to jump in there?
I'm happy to jump in too. Whether or not the government subsidizes solar, the investment case for it is actually getting better by the day. Such as it'll command private investment. And the reason that's happening is because storage capacity, battery technology is getting better. It's increasing at a rapid rate. And you're looking at the expansion of AI data centers, which consume tons of electricity. Many of them are actually turning to solar, and many people are happy to finance themselves. So, you know, whether or not the government subsidizes or not, I mean, you know, the government doesn't invest in anything. They only do that for things that actually really need it. If battery technology can get there, and it's rapidly improving, solar's investment case will stand on its own, and you're going to see consumption of the panels move up astronomically. So I think that outlook is getting better by the day, and you're seeing a lot of the tech bros in Silicon Valley actually start talking about solar as the answer to their prayers in terms of the capacity they'll need, the base load they'll need. It'll go from a nice to have to a base load very quickly if they're able to crack that code, and it's looking like the brightest minds on earth are on it.
Anybody else there on that question?
I would just second what Andrew's saying. I mean, whether you're talking about a green energy revolution or an increased electrical demand to support the AI, any way you look at it, I think that solar has an important and growing role to play in the in electrical infrastructure, which, regardless of U.S. policy, is going to be supportive of silver price and silver demand.
Marcio, I saw you raise your hand
there. I agree, but there's one very important point here. Most of the statistics are based on the developed world, but there's a huge demand that's going to come from all the underdeveloped world. You think about the other countries that are still need to pick up the pace and catch up with the EV revolution. So the forecast is super positive, I would say. Yeah.
David Wolfen, why don't we go to you here?
Sure.
We know that currently silver is not on the critical minerals list in the U.S. or Canada. Do you think it should be? And more largely, or more broadly rather, what is silver's role in the energy transition, do you think?
Absolutely, it's critical. It's used in so many things. Our number one trading partner is Samsung, and it goes in their electronics, and they're working on a solid state battery, which will be much safer, faster to charge. So it's going to be very critical from that standpoint.
Sam, do you have any comments?
Well, I agree that silver is on the cusp and will likely become a critical metal. I mean, you just have to look at the fact that I believe that 2025, if I'm not mistaken, will be the 5th year in a row that supply or demand exceeds supply in the silver market. That can only happen so long before the importance of silver and the gap between demand and supply becomes acute enough for it to be considered critical.
And you know what's interesting about you know what we just saw yesterday in the U.S. with the Trump administration slapping on 50% tariffs to copper. You know, silver isn't on the critical minerals list down stateside just yet, but America only produces 32 million ounces of silver every year, which is way less than they consume. Now, silver is used in everything from, well, everything we just talked about, but even in terms of military applications. And, you know, I like the prospects of you know, the administration down in the U.S. is doing everything they can to expedite permitting, to backstop project financing for companies to get projects to market. But I think it's only a matter of when, not if, they turn their head to silver, just given they really don't have any meaningful domestic supply and very few projects that can come online very quickly, like Sam's or like mine.
I want to go around the horn here with everybody. We'll go back to Lon to
I mean, I'll jump in here and I'll
Right, go ahead.
Yeah, I just wanted to add to that comment. I mean, obviously silver is a critical metal for technology and advancement and electrification. I would just kind of caution that, you know, is there really a long-term benefit of having the government involved in your business? I think it's probably better to let the market sort it out. And you know, a lot of words from the government's great, and if there's permitting and advancements, that is wonderful in terms of opening up the market. But you start labeling things as critical, and then as a business owner down the road, that could turn on you when the government tells you what you can and cannot do with your product. So I think silver's fine the way it is, and I think it's got a great future. But maybe we just don't need government involved in our businesses.
Agreed.
Any thoughts on that? Anybody? Okay. Next question here, and again, we'll go around the horn here. We'll start with Lon. I'm just curious, what would be the thing that you're most enthusiastic about, either about silver itself or your company's projects and operations, or the other side of that would be, what are the main challenges as you see them?
Well, I think it's nice, and I think this will be shared by everybody on the panel. It's nice to finally see, after what has been sort of a bunch of challenging years for silver to get its due. And I'd say on both sides of the equation, both the investment and as a precious metal, but then also, with this great supply demand picture for what it's being done. So I think that's great. And I think, what we're seeing is sort of a new level, a new, price support being put in place here. I think the big challenge, and everyone's aware of this, and there's companies here, our company's trying to solve, there's other companies on this panel trying to address, what really are going to be the new sources of supply, and that's and primary supply, mainly. I think that's has been and is going to be the big challenge. A lot of what the market's been talking about in terms of M&A has been existing production, which hasn't really increased the amount of available silver that we're going to need. So that bodes well for pricing and for those projects that do get permits and move ahead. So I think. I think it's a positive picture for silver finally, and we should all, as companies, take advantage of it to get those good projects, built, and help to build some bigger silver companies.
Who wants to jump in?
Yep, I will. So I think in my point of view here, one of the main challenges that the mining industry is facing is how the mining industry is going to be better presented to the society and secure that we can guarantee that we get permits on time in a timely, adequate way. Because in the last couple of years, not only in Latin America, but all over the world, permitting has been really a constant challenge. And make sure that you have the permits is something that it's important to develop project. Doesn't matter if it's silver or copper, but it's the permitting situation, something that I see as a major challenge. And having assets that you can have permits or near permit situation is a big plus. Yeah.
Jeff, I saw you raise your hand there.
Yeah. Not only have I worked in the mining industry for 25 years, but I'm also an investor. I'm 90% invested in silver. So I focus on the macro and the technical. So if I can offer that to the investing crowd, and I'll reference a couple of technical analysts. It's not my original work, but guys like Jordan Royburn and Rothschild Bad Charts. And what's happening right now is we're going through something that's called a major capital rotation event that's only happened 3 times in the last 100 years. We've got to look at multi-decade charts, and we've got a great bull market, a great U.S. bull market since 2008. But what's starting to occur is gold starting to outperform the 60-40 portfolio, and it's just a process. It's a quarter-over-quarter process that's telling more institutional money and pension money to sort of and retail money to come into our space. It's really just starting. So as this capital rotation event is in full force, I think we're just really starting in the silver space. So I think there's a lot of upside left in this, and it's a tiny market cap space. So all those capital flows coming to this tiny market will have a major impact.
I can add to that. If you look at investment demand with the ETFs, that's growing, and Tether with stablecoin. The rumor is they're going to launch a silver one, so look out. The demand is going to explode, and supply can't keep up, so the price has to go higher.
So a stable coin backed by silver, is that the plan?
That's what we're hearing.
Yep. Okay. And Sam? How about you? Are you seeing, or are you anecdotally hearing that more institutions are moving into silver?
I think that kind of underpinning everything is this, and silver is certainly, and perhaps in the lead in this space, is that the story is changing from a demand side to a supply side. And if you're looking at silver, if you're looking at copper, zinc, really anywhere across the metal supply chain, the conversation has been so much on demand and what is demand doing, and is demand going to be decreasing? And I see that switching pretty dramatically to the supply side. And the supply side of the story is very supportive of increased flows of capital, because across the mining industry in general, but certainly in silver, some of the very large, long life deposits are near the end of their life. And quite frankly, the pipeline for new supply is behind by potentially decades. And so I think that that's going to support a renewed interest and renewed capital flows into the mining space in general, but certainly into the silver space as well.
All right, let's wrap this up with one final question. I'll throw it to Andrew, and I'd like to get each of your thoughts. Maybe you could encapsulate your thoughts about the tailwinds for silver, how sustainable they are. We know silver broke through what is considered kind of a psychological level of 35, seems to be pretty comfortable up here around 37. So, Andrew, do you want to take it?
Well, listen, I mean, silver is such a small market to begin with that, any real movement from generalist money into the industry will have a outsized effect on where it actually ends up. I mean, I think every one of us here, has the vision that we're just at the front end of what looks like a nice little cycle here for silver. But, I don't really spend too much time thinking about, the outlook, simply because, I'm one of the few projects out there that will work and be high margin really in any pricing environment. So I focus on what we can control. And with what we can control, it's how do we upgrade, how do we expand, how do we get this thing permitted, and how do we get it so that we can actually make money while this cycle is still ongoing. And if silver runs and breaks through, Taylor previously said that if silver just goes to its historic silver gold ratio mean, with gold where it is now, you're looking at $47 silver. Well, if that happens, I'm moving to Monte Carlo pretty much. But once again, the outlook's great. When silver hit 37, you still didn't see generalist people talking about it. It's still not on CNBC. It's still not on Fox Business. It made very few headlines. That means that the real money hasn't really entered the game yet. And I got to hand it to all of the producers on here, because they're now standing in the spotlight and like showing the market just how robust these projects can be at these levels. So if things run, that's great. But, I'm only focused on what we can control, and what we can control is looking pretty good.
Okay, Lon, how about you? Final thoughts?
Well, I agree with a lot that Andrew said, and I think it's important to focus on those elements that you can control in terms of building a business and making it a sustainable business. That's very important. And I do agree that there's some great tailwinds when you look at the place that silver has taken, in the market right now. And if you think, through historically, what have been the uses for silver, and with the advent of digital photography, that was one big element of demand that just sort of disappeared, vaporized, and then where did silver get left at that point? And now we've identified a new growth industry that is dependent on silver. So I think that's a great factor to have as a silver producer when you look at that from a long-term standpoint. So I think it's good to be enthusiastic. It's good to be optimistic about these price levels. I think looking at the comments today in the panel, we've all been very cautious to leave those big arm-waving projections to the economists who are paid to be wrong. So that's fine. But we can enjoy the good days for what it means in terms of cash flows or the ability to access capital. But again, it comes back. Build solid companies based on sound principles, and you'll get payback as an investor in all markets.
Yeah, let's go to the center square for Jeff for your final thoughts.
Yeah, so a bit more on the macro side. I just would like everybody to dig into these long-term charts. On a 50-year basis, precious metals are cheap relative to the U.S. stock market. We know silver is cheap relative to gold on a historical basis, but also the silver stocks are probably trading at half price relative to silver. So once the capital flows start to enter into our space, it's leverage upon leverage upon leverage. Obviously, more companies will enter the space, but the quality of the companies, such as the gentleman on this panel today, it's a small space. It's probably less than 50 companies and probably less than that in terms of quality. So I think we're going to see a lot of upside.
Marcio?
Yeah, for sure. I'm going to just add a couple of points here. Like, I think really important here is would be not to rely only on the potential upside on the silver, but on the lack of quality assets with silver deposits that can really feed the next revolution of AV. But also to be aware that if you don't have a lot of talent and people and executives or engineers and people involved working allied with a good plan, you cannot make it work. No, it's all together. It's a combination of many factors. And many of us have been through many cycles in the industry, and probably some of us have seen the silver at $11. It's great to see at 37. And a lot of people told me for many years it would be at 50. 37 is great. But let's find robust assets that can really continue to generate return to the investors. That's my view.
All right, let's wrap it up with David and then Sam.
Okay. Yeah. Well, I agree with everyone, what they were saying. The ratio originally in the ground was 16-1. So that would be nice if we could see that again. But basically, I just control our company and our costs and try to maintain a healthy margin and keep our debt down. And hopefully our shareholders will stick with us. They've been pretty happy so far. So I wish everyone on the panel good luck going forward.
Thank you.
Last word, Sam, go ahead.
Yeah, absolutely. I think that when you look at silver, I think the price move that you've seen since 2020, which was the end of a decade-long string of silver bouncing around $12 to $15 an ounce. I think that the movement in price that you've seen is built on fundamentals, which is encouraging to me. We're not seeing a massive, immediate-driven run-up. We're seeing a very steady, rebasing to around the $25 range for the last 4 or 5 years. We've seen another move up, but the way that the price is acting, to me, it looks like it has a very strong foundation that's based in supply-demand fundamentals. So I think that's pretty encouraging. And David, like you and Lon are saying, good projects that are well run with a focus on cost and margin. That's where investors should be looking to, in my perspective, to put their money.
Well, gentlemen, thank you very much for everything, hearing about your various production and projects, et cetera, and also giving us the macro picture on silver. We really appreciate it, and so do our viewers. Thanks again.
Thank you.
Thank you. Thank you.
Thank you.
All right, our thanks to our guests. Thank you very much for watching. You can watch the replay on our YouTube channel. That will be up soon. Thanks again. We'll see you soon. Take care.